Are you planning to invest your money? Where would you invest your money? How would you know where to invest? In this video, I will tell you the 4 most important tips to invest money. Follow these tips to become successful in your investment plan. I hope you would love this video. Stay tuned with us and watch the complete video. 1. As you start investing, keep these things in mind. When should you start investing is one of the numerous queries that new investors have. What should you put money into? Whom should you follow or ignore when it comes to financial advice? Why must investing be so difficult if it is so crucial to your financial future? The good news is that it doesn't have to be. These 10 simple and direct suggestions for first-time investors show you can simplify the complicated process of learning how to invest. 2. Start right away. Starting out is the hardest challenge for someone new to investing. According to Nicholas J. Scheidner, a wealth management advisor with Barron Financial Group, the best time to start investing is right now. Don't hold off on entering until the ideal time, he advises. Start right away and keep building it. Additionally, he advises beginning investors to start their first year presuming a loss on their investment. Recognize that sometimes your investment will lose money, and if it does, it doesn't necessarily mean you did something wrong. In actuality, it probably means the opposite. You should increase your purchases while they are discounted. 3. Do not be alarmed by the media. To recognize that the media and you as an investor have completely different agendas is the best piece of advice Andrew Langdon, a licensed financial planner and founder of 5 Points Financial Planning, would provide to novice investors. The aim of the media is to garner views, which they frequently accomplish by creating dramatic headlines. Your objective as an investor is to increase your capital over time, and you may do this by concentrating on variables you have control over, such as time horizon, risk, costs, and taxes, according to Langdon. According to research, those who don't try to time the market will be better off in the long run if they don't make many changes to their portfolio. 4. Pay attention to your savings rate. Poor portfolio performance can fool new investors, just like dramatic headlines might. When your portfolio experiences a loss, it's simple to question your investing choices, yet stock market losses are inevitable. Ben Hakema, a licensed financial advisor at Illuminate Wealth Management, advises concentrating on your savings rate rather than the performance of your portfolio. Staying invested and saving enough are the 2 key factors for success for long-term investors, he claims. You have some influence over how much money you save, but not over how your investments do. Beginners will be in a good position to succeed if they consistently concentrate on maintaining or raising their savings rate, according to Hakema. I hope you liked what you watched. Kindly subscribe channel for more upcoming videos.